All right, everybody, looks like the UAW has started a strike against the big three automakers in the US, legacy automakers, and Ford, Stellantis/Chrysler, and General Motors. Here's a statement from the leader of the UAW, Shawn Fain, on how they're executing against the strike and why they're doing it. Let's go ahead and take a listen.
Tonight, for the first time in our history, we will strike all three of the big three at once. We are using a new strategy, the stand-up strike. We will call on select facilities, locals, or units to stand up and go on strike. This strategy will keep the companies guessing. It will give our national negotiators maximum leverage and flexibility in bargaining. And if we need to go all out, we will. Everything is on the table.
Now, this is a huge deal. This is the first time that all three automakers in the U.S., legacy automakers, have gone on strike at the same exact time. And the way the UAW is executing this, which I'll give them credit, it's a very strategic, very smart way of striking, is that they're hitting three specific facilities for those three automakers. Those three locations are the Wentzville assembly plant in Missouri, the Toledo assembly plant in Ohio, and the Michigan assembly plant in Wayne, Michigan. Now, here's an excerpt from CNBC that describes exactly what those plants are building. The facilities are GM's midsize truck and full-size van plant in Wentzville, Ford's Ranger midsize pickup and Bronco SUV plant in Wayne, and Stellantis' Jeep plant in Toledo, Ohio. And what's interesting about those specific plants is that it's not all the cars that they build. Obviously, these automakers build a ton of cars across many different plants, but these specific plants are making high-margin, high-volume products. Now, here's a statement from Jim Farley before the UAW went on strike. It's actually very eye-opening, and it really gives us an idea on why this is such a big deal. So let's go ahead and take a listen to Jim Farley.
So how quickly would you have to potentially lay off people from a final assembly plant because you're not getting transmissions in, and therefore there's no production?
Well, within hours or days, depending on the plant and how much float we have, we'll have to shut plants, assembly plants, hours or days.
Quickly put in some perspective. The offer that they have, what they're demanding, relative to where you are right now, how much damage would that do to the bottom line if you were to say, sure, we'll give you 40%?
If we signed up for the UAW's request, instead of making money and distributing $75,000 in profit sharing in the last 10 years, we would have lost $15 billion and gone bankrupt by now. The average pay would be nearly $300,000 fully fringed for a 4-day work week. There is no way.
Per employee, per UAW employee.
Yeah, this is our fully tenured school teacher in the U.S. makes $66,000. Someone from the military or fireman makes mid-50,000. This is 4 or 5 times, 6 times what they make. There's no way we can be sustainable as a company. That's why we put our proposal in 2 weeks ago to say, look, you want us to choose bankruptcy over supporting our workers? Here's our proposal. Let's work through this. We've heard nothing.
Now, that might be an eye-opening statement that if the company were to pay their folks 40% more just at the factory lines, that it would bankrupt the company. And it really highlights just how dire of a situation this is for Legacy Auto, especially as they go through an electric vehicle transition. Here's a statement from Ford's earnings, from the last earnings in the second quarter of 2023. This is the company's adjusted EBIT. EBIT stands for earnings before interest and taxes. It's a fancy word for saying profits, what falls to your bottom line, kind of. Last year, they made $10 billion, and this year they're expecting to have about $11 to $12 billion. But this is before the strike, right? So that number doesn't include that. But regardless, they're making money. If you fast forward to their balance sheet, which is basically a form that says how much money Ford has and how much loans Ford has, they have about $40 billion in cash-ish, which includes both how much they have in the bank and how much they can say loan against, or how many credit lines they have, kind of like a business credit card is a sort of simple way of thinking about it. But on the flip side, they have about $95 billion of long-term debt. And so they have twice the amount of long-term debt than they have cash in the bank. And so if we go through a very simple exercise that says, okay, let's take what Jim Farley said, that all the profits are now gone because of these wage increases increases if the UAW gets what they want, then essentially the company is kind of worth nothing. And that's because they have to pay against their debt. They're not generating enough money to pay against the debt. And if they were to liquidate all the cash they have on hand, it still means that they have debt to pay off. So they have to start liquidating assets. They have to start selling plants. They have to start shutting down factories, which means less sales, which potentially means more losses. And then if you layer on top of that how they're performing in their next generation vehicle, which is the electric vehicle, here's a snapshot from their latest earnings report. You can see that as they're selling more, which is good for Ford, they're losing more specifically in electric vehicles. So now they have the UAW putting a lot of pressure to reduce the profits, potentially getting them to zero profits. And then as Ford is transitioning to the next generation vehicle, they're losing more money. So what does this mean? Now that the UAW is officially on strike and legacy automakers are freaking out because they're afraid they're not going to be able to make any more profits, what does this mean? So number one, if the strike is prolonged and say these folks are striking for, I don't know, say 4 to 8 weeks or potentially even longer, this means that these automakers are going to be putting less and less cars out there for people to buy, which could potentially increase prices for these cars. Now, this could be potentially offset by a high interest rate environment, which means that less folks are able to afford these cars, which is going to lower demand. And in addition to that, you do have high inventory in a lot of places for these automakers for specific models. And in the case of Stellantis, they have such high inventory that they could probably ride out the strike for probably 3 to 4 months because they have just so much on dealer lots. But regardless of what happens here, if the strikes are prolonged or if they do agree to say give the UAW workers a 40% raise, this is a lose-lose situation for Legacy Auto. It's expected to be about $1.6 billion a week combined for all three automakers. Ridiculous amount of money there. And then if you take it farther and say, okay, we do agree to have that 40% raise or even a 35% raise, this is going to significantly eat into these companies' ability to turn a profit moving forward. And so regardless of what happens, these companies are going to have to figure out how to make drastic cuts in places that they probably don't want to. And this could very much impact their ability to transition into EVs because it's such a big money-losing business for them. It could put them in a spot where they have to make cuts there, which is the last thing they want to do. And that's because you have a competitor in Tesla that is purely EVs, that is not unionized, and is not shutting down their factories. And if anything, they're ramping up their factories with the release of a pickup truck, more Model Ys, a compact car that's going to cost $25,000 in the next year or two. And to really outline how bad of a situation this is for Legacy Auto, here are the EV registrations from January through July. Tesla is at 60% market share, Chevy is at 6%, Ford is at 5%, and Stellantis is not even on the list because they don't have an EV yet. And again, this is without a pickup truck or a compact car from Tesla. Their pickup trucks should launch here in the next few days, and their compact car should come out in about a year or two. But the key takeaway here is that legacy automakers, specifically Ford, GM, and Stellantis/Chrysler, are losing dramatically. Higher costs or shut down factories. They have losing businesses in EVs. They have a giant amount of debt, and their profits will go down. This could be the beginning of the downfall for these automakers. They've been riding these debts for a really long time. A lot of their assets are tied to the gas car, which if it goes away in favor of the electric vehicle, those assets now become liabilities. And even though the UAW may win in the short term and their members get paid more, theoretically, this could lead to an outcome where these companies cease to exist because of the massive pressure they're under and their inability to transition to the next generation vehicle, which also highlights how poorly run some of these companies have been for the last decade. Give me a like if you enjoyed the content. If you want to support the channel, super easy, click subscribe. Let me know what you think in the comment section below. And if you want to go above and beyond, I have a link to my merch and Athletic Greens, which is a supplement that I take every single morning, in the description below as well. And lastly, before we leave, we are Penn State. They play Illinois this weekend. My score prediction is 38-13 Penn State at Champaign. We are. Thanks so much for watching, and we'll see you in the next one. Bye-bye.